Folks, happy Father's Day weekend and welcome to Best Stock Charts for the new trading week. What we're going to talk about today is a sentiment indicator that is leading me to believe that we are near but not quite yet at a bottom in this market. So we're going to go over that chart. We're going to talk about our top 5 picks at current, subject to change for the new trading week. Those are QQQ, SMH, the semiconductor holders, KIRK, KIRK, that's Kirkland's, NVDA, and ADM, Archer Daniel Midland. ADM is a short. So let's talk first about how we did last week. Well, I'll be honest with you. I'm not going to sit here and BS and avoid what the number one question should be on your mind is, how did I do? How was my week last week? Well, I'll be honest. We were down last week. We took a strategic loss last Monday because I went into the new trading week with a skew to the long side, meaning I had both longs and shorts on the table. We had hedges on, so it minimized any downside for us. And we did come back some late in the week with some options trades that went our way, along with the gold mining stocks. But other than that, it was a rough week. And we wanted to take risk off the table early on in the week because, again, I felt that I was too skewed to the long side, and thank goodness that we did. So what we're looking at now is not worried about taking a strategic loss from last week. We're looking at the future because I plan on making that money back and then multiplying that money times 2, 3. And how are we going to do that? Well, we're going to buy right. And we're going to wait. We're going to sit on our hands and buy when it's time. And right now is not the time to go jumping in with both feet simply because we're up on Friday and loading up on stocks. This is a very, very serious sell-off. Many people are out there. This is your first bear market. And I'll tell you something. There are a lot of dead bodies found in a bear market when people see what they believe to be a good setup, which would have worked 100% of the time during a bull market only a few months ago. Now, that same beautiful setup that you would have traded a year ago, generally that leads to failure. A lot of dead bodies will be found in the street, accounts blown up. Don't let that be you. So we need to wait for capitulation. What might that look like? Well, what it'll look like is when you have VIX, the volatility index, ripping through the ceiling. Despite all the volatility that we've seen of late, and the fact that volatility is, yes, historically high, we have not seen capitulation. Normally, in bear markets past, you would see VIX with a 40, 50, 60, 70, 80 handle. We haven't even gotten through 40, and frankly, we're not even above 35. So that leads me to believe there are still people out there not willing to believe that this is a bear market. The bull market's history. We will be able to make money to the short side. We will make money on dead cat bounces. We will make money on counter trend rallies. But to think that you're going to catch a bottom in this market without buying at historical support levels is, frankly, I'll use the foolhardy. I don't think I've ever used that phrase before in my life. So before we get to the charts and begin our commentary, let's give a shout out to our sponsors over at TrendSpider. So folks, before we begin our analysis, I want to talk about our sponsor, again, TrendSpider, and how they can help you to find high probability setups and also help you to increase your probability of profit. The top 3 reasons why traders lose money, besides being too big in any one particular trade, is they buy at the wrong time, they fail to have a trigger set on their charting software to alert them when a trend has been broken, or they don't know where resistance is above and where to book profits. Have you been through this? Can you relate to this? Everybody can. It's okay. So what's the general result of people over and over again displaying these poor behaviors? The result? Their confidence gets crushed. They may blow up an account and may never return to the stock market again. And the stock market's a great place to build wealth, but you need to know what to buy and when to sell. Now, what if I said I had a solution that would help you remove doubt and even validate your trading decisions, whether or not you're experienced or inexperienced. Well, that solution is to automate your technical analysis using TrendSpider. Their powerful algorithmic automated trend lines and VWAP, volume weighted moving average, will allow you to adopt a rules-based approach to your trading. No emotion, just clear buy and sell signals, which when fired off will alert you real time to either your phone, PC, or both. Their backtesting functionality will allow you to test your trade theory before you ever put $1 at risk. Their scanners will provide you dozens of trade ideas each day. The seasonality functionality will allow you to see when the best month is to buy the stock or sell the stock, the best week or day is to own the stock or ETF. You may be saying, though, I know this is what you're thinking. You must be saying that this must cost a lot of money. What you're telling me is you're giving me a lot of good functionality, a lot of great tools, which is usually reserved for institutions. The good news is this, is that TrendSpider is very affordable. And if you have made the mistakes I've mentioned before of buying wrong and selling late, if you invest in yourself and TrendSpider resolves these behaviors, well, doesn't TrendSpider pay for itself? Folks, use the link below. Get my 35% discount code using discount code CON35. Take advantage of it. They have a 7-day, no-risk, free trial. TrendSpider, let's get to the charts. Okay, before we begin with the cues, let's talk about a bit about the market, right? What are we looking for here? And I have some good news. Not a ton of it, but some. Now, charting is not just about looking at a chart of whatever stock or ETF you're looking at and saying, okay, it's time to buy. Well, it could be, but it may not be. Not if you don't have proper sentiment indicators that are flashing buy-sell signals. Now, looking at the bulls versus bears index, meaning do we have a lot of bullishness or bearishness? In this case, if the chart is going down, we have a lot of bearishness. If it's going up, we'd have a lot of bullishness. Now, you may be saying, wow, this is not a good time to buy stocks because it looks to be very, very oversold, and it is. We are nearing the lows, pretty much historic lows of May. Now, in all actuality, though, I pointed this out, this bottoming or this oversold condition back in May, and I said, listen, this is what may be perceived a bad indicator. It's actually bullish. It means that a lot of the sellers that were out there at that point in time, they're done selling, and we're due for an oversold bounce on the stock market. And sure enough, what do we get? We got a 10% move in the stock market, probably like the next day or two thereafter I made that call. So here we are yet again, lots of bodies in the street, lots of fear out there. Are we done going down? No, we're not. Might we pop up on Monday, Tuesday rally? Sure. But the macro trend is still to the downside until such time as we get, as I mentioned earlier, that volatility spike. At a bare minimum, we got to be above 45 on the VIX for me to say, okay, you know what? Blood in the streets. If you're waking up each morning and you're seeing the futures action bright green, meaning the futures are up, they open the stock market up, that's not the bottom. It's never the bottom. What you want to see is what we saw on Thursday. What we saw on Thursday is when I woke up, which is about 5 a.m., we saw blood in the streets. So the futures were down 2.33%. When I went to bed the night before, they were up around 0.75 percentage point. I woke up down 2.33%. That's blood in the street. Now, the problem with Thursday's price action is that, well, it stayed down. We closed at the lows of the session. There were no buyers. There was no bids whatsoever. And the ideal situation is that we get one of those mornings again. We wake up, bright red futures. The however is, and the change is this from last Thursday. What we want to see is a bullish reversal bar or a bullish engulfing. I'll show you on TrendSpider what a bullish engulfing is. As a matter of fact, folks, if you want my 5-part video tutorial on my top 5 favorite candlesticks, use the link below and get my 5-part video tutorial on my top 5 favorite candlestick patterns. Bullish key reversal and bullish engulfing are 2 of them. So let's get to it. Let's talk about our top 5 favorite, and we'll begin with the Qs. So what we want to do here is start off with a blank canvas, then we'll overlay some indicators on top of the Qs, and we will see where we're at. Now, I'm picking off on a weekly chart right now that we have a breakdown of a bear flag setup. And what's a bear flag setup? Well, it's this. It's when you sell off, rally, then you sell off again, right? What did we do these past few days? We rallied, and now we have broken down yet again. Now, another way you could just do it is just simply take your crayon out and do this. All right, and this is a very, very bearish event. So when you see this on a daily chart, yes, it's bearish. When you see it on a weekly chart, it's really, really bearish because that means the selling's probably going to go on for at least another week. So we have broken down last week below the lower band of support. And you may be saying, and Jesus, the guy just told me this is one of his top 5 favorite charts. Folks, there aren't many stocks out there that I want to buy right now. So what I'm waiting for, with a lot of liquidity right now, lots of cash built up, is I'm waiting for the capitulation, that VIX spike, capitulation on equities. Then I want to go in and I want to have my shopping list available. I want to be buying Qs, SMH. I want to buy the market and some individual stocks, best of breed stocks, NVDA, and other names. So looking at the macro view here of the Qs, it appears as though we're heading lower next week. Now, what could poke a hole in my argument? When you look at the daily chart and you use the automated trend lines, you could see that you have support immediately below, which implies that before we break down further, there's probably going to be a bit of defense, or they're going to sell this off hard. And actually, this is where my price target is, right at around 260 per share of the Qs. Okay, that's good. That makes sense. So yeah, this is very accurate, and it aligns with what I've been saying, is that I believe that the bottom on the Qs is going to be between 265 and 259. TrendSpider saying we have initial primary support here, 267. Okay, I don't think it holds. I think you need a sell-off and then a reversal bar. I think we need to tap this lower band of support down here, and then we reverse off of it. So what I want to do is this. I want to create an alert. Now what we're doing is we're preparing for this trade on a Saturday, market closed, no emotion, just setting our strategy. And we'll keep this active for a few weeks. And our alert is good to go. Now, one of the other reasons why I'm interested in the Qs is this, is that when you take a look at the seasonality of the Qs, this goes back 12 years. Here we are in June, right? June, historically, a fairly weak month relative to the rest of the year. The however is that July is vastly the best month out of the year to be long of the Qs. See the power here? So with this knowledge, then now I can determine, okay, do I want to get overweight? Do I want to stay conservative, take on a small position, maybe sell naked puts, which is a bullish trade? Me, I would personally get overweight of the Qs on a capitulation sell-off. That's what I would do. So that could be buying the common stock outright or buying some call options, maybe a call spread to help finance the trade. But the Qs are setting up very nicely, but we are not at a low. We are not at a low. You're already hearing the same people who got it wrong saying that the stock market was going to continue on to higher highs several months ago. They're back now saying the bottom is in. Guess what? Bitcoin broke down to about 20,000 today. So the volatility is still in the market. The power that you have as a trader is to remain liquid. Don't get influenced by other people's gibberish, especially the well-dressed thugs on CNBC, and to use automated technical analysis. Use the charts, folks. The next chart I want to go over is SMH. SMH did not have a good week last week. Here's the weekly chart. And again, what we saw is another bear flag setup. Right? We broke down the week prior to last week, a continuation breakdown. Also, the automated trend lines picked up. Here, click of a button. They were warning you, do not go buying the semiconductor sector. You have a lot of resistance above. And if you had TrendSpider at your disposal, you would have been able to click a button and it would have showed you, trouble ahead. Do not go buying SMH. And sure enough, roll over. We broke the new lower lows. The probability of us moving lower this coming week, very, very strong. Daily chart. On a daily chart, we can see that we had a nice reversal day on Friday, and it was on volume. So we may get more follow through to the upside on the SMH, but I'm not ready yet. I'm not ready yet to pull the trigger here because I do believe that we're going to head lower. Where would we begin to get aggressively long of the SMH? Well, if 202.06 breaks, I'm looking at 174.20 on the SMH. That's a good ways away from here. So while we may see a short-term pop here, I'm not overly excited about buying at these levels because I'm not seeing a lot of historical support. There's nothing back here that would act as a support level. So I think that we need to hit 174.20 on the SMH. And it doesn't have to be exact. It'll be in that ballpark. And we'll be buying the SMH very, very aggressively. And that assumes that what we're seeing is when we're buying is that you have blood in the streets, right? People are panicking. They're freaking out. They have margin calls coming in. We don't have that. We're not on margin. What we're doing is we're sitting with cash. We're trading some options for cash flow strategies, but that's pretty much it. So the key is right now is your capital reserves. Try not to use any more than 50% of your net lick, meaning keep 50% of your money in cash, in a money market account, and that way you're going to be able to take advantage of that day, that bloody morning where if you're on margin, you're going to be out of your mind. But if you have liquidity, it's what you've been waiting for. So you're going to be able to take advantage of blood in the streets, Warren Buffett style, step into the breach, and you'll be rewarded. So that's the SMH. These are the stocks that we're watching, not necessarily for this coming week, but within the next few weeks. The next chart up is Kirkland's. Now, this trade here is more of a strategic swing trade, very short-term in nature, and I got the idea. I ran a scan on TrendSpider, and when I pulled up the automated trend lines, it showed me something fascinating on the monthly chart. So let's bring up the automated trend lines. Now, this is the power of the algorithm, folks. What it showed me is that on a monthly time frame, we hit smack dab into support on Kirkland's, and we bounced. So this is a very, very bullish setup. Now, as we drill down to a weekly chart, we may still see more pressure on Kirkland's because we did break down below support on a weekly time frame. The however is that when I overlay on the weekly chart, monthly support and resistance in solid line, that's the weekly chart because we're on a weekly primary chart. The secondary overlays that we're looking for monthly support and resistance on top of a weekly chart. They're represented in dashed line. So what you see here is that we came close. And I misspoke before. We didn't tap that lower band of support in a monthly time frame. We came close. So I stand corrected. But what we're going to do here, we are going to move lower down and into this support level. And guess what I want to be doing? I want to be buying. And do I want to be buying because I think Kirkland's is the next Apple? No. I'll tell you why in a second. And we'll keep this active for a couple of weeks. That should be plenty. And our alert is set. So the reason why I want to trade Kirkland is because of this. When you take a look at, and this is one of the other values of TrendSpider, is that you see shorts are moving into the name. So What short sellers are prone not to do is not to book profits at support levels. They usually wait until they get squeezed out. It's really weird. So short volume is rising in Kirkland, yet we're nearing resistance. So when I see this, and even on the daily chart, I'll take it to the daily chart. See how it's skyrocketing up higher, yet Kirkland's is the momentum to the downside is now waning. And you can see, even on a daily chart, it's picking off bottom support levels below. So what we want to do is say, okay, well, how many days is it going to take to cover short positions? Because what we have here is an awesome candidate for a short squeeze. So I like to take my calculator out. And I take a look at the number of shares short. Nearly 25% of the shares are short. Not the best way to measure the number of days to cover a short position. The best way to do it is this. Take your number of shares short, 3,160,000 shares short, and you divide that by the 3-month moving average of volume. Divided by 3,97660 equals, that's 8 days worth of shorts getting annihilated. That is a handsome trade. So let's recap why we like it. The short squeeze. If there were no shorts in this trade, I probably wouldn't even bother with the trade. But the numbers work out here. When I take a look at the chart, we've already gone over this. It's worth rehashing. Monthly chart. Actually, we'll go with the weekly chart. Yes, we broke down last week below weekly support, but we know we have critical support immediately below. So expect more weakness on Kirkland. What I'm going to do is I'm not going to sit at my desk watching the stock, see if it hits that historical support level. I am not going to buy it if it decides it wants to run up. I'm going to wait. Rules-based approach. As I mentioned earlier, when my alert fires off, that's when I consider taking action. Not until then. That prevents me from buying wrong. I'm using a discipline. And if I do enter, guess what my stop loss is going to be? Right below monthly support. If we break it, I'm out. The next chart we're going to take a look at is NVDA. And this is a weekly chart of NVDA. And the automated trend lines are picking up support down here at 91.43. Can you believe it? This stock was over $300 a share only a few months ago. Now we're looking at a potential price target of sub $100 on NVIDIA. It may not get there. So when I'm looking at this chart, it tells me automatically that we're going lower here because we broke, as I mentioned earlier on the SMH, we broke a bear flag setup, continuation breakdown last week. Now, what I like here is this, overlaying the monthly chart. And guess what that brings up? Support right at this volume shelf at around, let's call it 142 per share. And right below there, I have my volume weighted moving average. So this is telling me I have two levels of support immediately below, not immediately below, but below, not too far away. So that's where we're going. We have more downside here, so I'm going to set up my alert. And then I'm not going to think about it anymore because I don't want to talk myself into a trade. I want to use the technology. The technology incorporates probabilities. When you're using probabilities in your favor, your probability of success increases dramatically. So I want to know if we touch breakdown. Not that I would short it on a breakdown, but I would certainly be looking for support at that 90 handle on NVIDIA. We'll keep a little bit of sensitivity on here. Now, this is the note that'll get pushed to me on my cell phone, to myself. So that way, let's keep this longer. That way, I know exactly what I was thinking when I created the alert. That's set. Now, let's take a look at seasonality. I haven't looked at this yet. All right, so the month of June, horrible month. That's actually the worst month of the year. July increases somewhat, but still, 50% is not a high probability of profit. Now, when you're looking at August, August is by far the best month out of the year. So This is valuable information for me. I know that I can allow this stock to drop down to support without having to worry much about a big whale coming in and scooping the shares away from me. The probability is low. It's going down to that support level. The only demand I have to place on myself is that I have to show patience. And a lot of times it's difficult for people to do. Use the technology, wait for the alert, and then act. Consider acting. I shouldn't say automatically act, consider acting. Then in August, we know that we want to be positioned in late June, early July, long on NVDA to enjoy the rally up into August. So NVDA looking rock solid here as a trade, but it's got to come to us. Now, the last chart I'm going to go over is a short, ADM, Archers Daniels Midland. Now, this was a high flyer. Now, this is a classic example of when the algorithm told you, get out now. Think about it. If you had, this is a monthly overlay on top of a weekly chart. We have a double top. Not that that means sell, but when you broke this support level here, you should have had an alert telling you, get out. Here's the alert. I'm long of ADM. ADM, that's what you do. ADM, broke, monthly support, double top, GTFO. I think you know what that means. This is a family-friendly show. I can't say it. We'll keep that active for a while. Not that we need it, really. But I'm just demonstrating that this is where, had you had TrendSpider, you should have gotten out. And I didn't mention this earlier, but members of the Contrarian Trader, silver and gold level members, they get TrendSpider included with their subscription. So I believe in it so much that I incorporated it into my product. Okay, so where are we going now? Where is this stock going? It's going lower. So this is going to be a short. What do I want to do here? Well, I want to identify where there may be support. So I'm not entering the trade at a support level. Let's throw up the daily chart for a moment. Now, what TrendSpider has is this is a brand new. It's called a gap filter. And here it is. I already have it applied. Good. Well, it's telling me I had a gap back here, but it's not picking off this one here. This gap which opened up on Thursday of last week. Now, what I'd like to see is a counter trend rally here to fill that gap right here. And then what I want to do is I want to lean into the short side. I want to open up a position to the short side because my bet is that it's not going to be able to close above 81.45. Now, what if it does? What if I short at 81.45 and it closes at 81.60? Well, I stop out with a very small loss. So I'm not too worried about that. Now, if I enter and the shares begin to roll over, well, then I want to add more to that trade. I'm not going to go jumping in and shorting if I want to short 1,000 shares. I'm not going to sell 1,000 shares at 81.45. I'll sell 250 short. And I'll add more on weakness, especially if we break down to new lower lows versus Friday's close. Now, going back to the monthly chart for a moment, I want to see where we might have support below, where I want to get out. I want to create an alert now, even before I got into the trade, letting me know where I have to get out of this trade because there are buyers out there and I don't want to get squeezed. So I'm looking at support down here at 73.57. So I'm going to set an alert here. I'm going to make the assumption I'm already short. That's my mindset. I'm going to leave some sensitivity on here because I want to get it notified in advance before it hits that support level. That way I could look at the volume action, give it some consideration. Do I think it's going to hold? Maybe I want to book some profits. Maybe I want to take it all off the table. All the alerts do is tell you, listen, evaluate the situation. Your price target has been hit. You've been rewarded for being disciplined and waiting for support levels to get hit. So what we're going to do, create that alert. Okay, there you have it. ADM, book short profits, monthly support hit, and we'll keep this active for more than a month. Not that it's going to take that long. and we're good to go. Now, for our entry, I want to go back to the daily chart, and I need to create an alert here. And here we have it, okay? 8 a.m. resistance hit, gap filled, resistance, instruction short. We'll keep that active. Now, I want to have this fire off twice. The reason is this, is that I want to get notified if we close above resistance. That way I could stop out of the trade if I'm wrong. So our alert is set. On the sidebar, here are all my alerts. I'm good to go. No worries about having to sit in front of my computer all day long staring at a screen. All I need is their mobile app. Simple as that. Sends me an alert. Folks, thanks for being here. Happy Father's Day. Smash the like button, subscribe to the channel. And don't forget my 5-part video tutorial, my top 5 favorite candlestick patterns. Don't forget TrendSpider, 35% discount code below. Until next week, folks, everybody have an awesome long weekend and a profitable trading week. Be well.